And that's frustrating. Yeah, I was just cruising along. You have to double click the stream button. You click it, and then there's another button to click it. And I was like, why aren't the comments changing? Well, that's why. Anyway, I went through all the news. My point was there's not much news. I think the only news on CNBC, markets are flat, Dow's flat, NASDAQ flat, S&P basically flat up slightly, but flat. But there's not really any news. I think the only news I saw on CNBC was home prices are getting better, but down payments are worse. So if you can't get into it, what's the difference? Okay, great. And then there was another article about what's commercial real estate going to do in 2026. I don't know, probably crap the bed like it has the last 5 years. So nothing there. And then on the crypto news, let's see. By the way, I go to Live Coin Watch. There's a news button in the bottom center. See, news. You click on that, and you can actually curate your news. You can go to settings. There's a little gear. See the little gear? Let me show you the gear. Where's the gear? The little gear. See the little gear? It's in the top right, top left. You can click that and unselect the crappy news sources, of which there are a lot of them. So yeah, I would do that so that you're not just getting tons of bullshit NFT news and all this kind of crap. But once you get rid of the spam, there's some pretty good, well, at least you can get an idea. Let's see. Open interest data suggesting that the move in Bitcoin today is more likely short-term covering, like short positions covering their positions, buying back shares they sold. They've already made their money, and that's why the market's melting up rather than new long positions being opened. Oh, God, Benjamin Cohen calls the Bitcoin bear market. Benjamin, shut the fuck up. From everyone in the world, shut the fuck up. This guy is called bull markets, but every week he calls something different. He's such a fucking clown. What a douchebag. Well, for 15 minutes, so that's it. When it was trading at 87,000, he called the bear market. It's up 2,000. He's such a fucking clown. Like, just when you read his words, you want to punch him in the face. And he's a nice guy too. Like, I've heard him. He's a nice guy, but he's just such an idiot. Why do people listen to this fucking dude? You would have lost all your money if you listened to this guy. Sheesh. All right, good for you. It's good that you have $10. $10 is good. It's a starting point, my friend. Let's see. Russia targets unregistered crypto miners with new criminal penalties. That's just so the Russians can steal their gear. How Strategy keeps buying Bitcoin during market turndowns. Well, because they keep finding idiots. Strategy keeps buying Bitcoin during the turndowns and downturns in the market by tapping equity markets and reserves, turning dilution and financial costs into a repeatable accumulation engine. This is what's known as a Ponzi scheme. Strategy funds its dip buying primarily through at-the-money equity sales rather than operating cash flow, meaning they sell shares of their assets to dilute everyone. And these idiots are somehow okay with it. Preferred shares and other financing tools add buying power but create ongoing dividend and interest obligations. The $1.44 billion reserve is intended to reduce forced seller concerns during prolonged market slumps. The model's constraint is the cost of capital, dilution risk, market sentiment, and index rule changes can tighten the loop. So Strategy just spent another $980.3 million on Bitcoin, adding 10,645 Bitcoin at an average price of 92,000. These guys can't win for losing, man. These guys cannot call it. They got to be the worst pile of dumbass purchasers Like, period. They somehow, anyway, it doesn't matter. They added 10,645 Bitcoin, $4,000 higher than it is now, lifting its total holdings to 61,268. What makes this round more interesting is the backdrop. Bitcoin's been sliding sharply from recent highs. Strategy's own stock often feels that drawdown as a leveraged proxy. Yeah, a sketchily leveraged proxy. At the time, the firm's been building a $1.44 billion reserve to calm concerns that dividends... You know how they built that reserve? By diluting everyone and selling shares. The same shit they would do anyway. So what's the difference in having a reserve of cash that you sold, that you got by diluting everyone, or just diluting everyone and buying Bitcoin? What's the fucking difference? You're going to dilute everyone? Oh, it's just after the... Well, no, we already diluted them. Oh, well, cool. I'm on board. I want to buy more shares. Well, we're going to keep diluting you. I know, but I'm an idiot and I love strategy. So I'll buy $2 worth of Bitcoin for $17. Sign me up. What a bunch of clowns. The reason that they're doing this Bitcoin, this cash reserve, is so they can calm the concerns that dividend and interest obligations would eventually force a Bitcoin sale during a prolonged slump. Well, it would. You have to sell something if you owe money to investors. If you owe dividend payments and interest payments, you got to pay them. So you got to sell what you got. So the real question isn't whether strategy wants to buy dips. It's how it keeps finding the money to do it, and how durable that machine is if markets stay ugly, and how willing people are to get stepped on by this company over and over and over in the most obvious fucking Ponzi scheme since Tether. Like, anyway, strategy treats Bitcoin as its balance sheet centerpiece, using public marketing and markets to finance and grow their holdings faster than a typical company could through operating cash flow. Why? Because they don't make any money. Their company generates no money. MicroStrategy is a fucking loser. It always has been. So this whole idea of digital asset treasuries is pretty stupid if you think about it. I'm going to take a failing company. Never mind that you gave me money as an investor and I lost it. I'm going to take a failing company and I'm just going to start buying Bitcoin, but I don't have any money because I'm a failing company. So how do I do it? What do I do? Oh, fuck, I'll issue more shares and then I'll buy Bitcoin. And people be like, yeah, I'd love to buy your failing company stock to indirectly own Bitcoin. That sounds like a smash up. So, like all these companies, these shit companies that start buying, we're a digital asset treasury. No, you're not. You're a fucking failed pizza company. You're a failed business intelligence company with too many staff that you should be making layoffs, and you probably should have your ass in jail. Because when they listed your stock on the NASDAQ or wherever the fuck it is, I'm sure this wasn't part of the original prospectus for your company. What a bunch of bullshit. Have you guys ever really just step back and think about how bullshitty this is? Like, this is their get out of bankruptcy free card? No, we're just gonna buy Bitcoin. Give us more money. And there's actually fucking dumbasses stupid enough to do it. It is mind-boggling. I mean, it just makes you want to slap the ripe shit out of his punchy face. Although he has a face that looks like it would break off. Like, Micro Sailor looks like if you hit him pretty good, his face would just crumble away. Like he's no more than just a sugar cookie in the shape of a human. I bet he would just disintegrate into a dust. Just a loose dust with some like chocolate bits. It's just, what a scam. Quick show of hands. I know there's not a lot of people here today. Quick show of hands. Who thinks MicroStrategy is a sound company? Some of you might. I don't know. Maybe you do. Who here thinks it's a sound company? The idea that a failed company can just turn and buy Bitcoin by issuing new shares over and over and over and over, and that will be okay. And that somehow that's okay. Because I go a lot of places and I just keep hearing these same idiots talk about, oh, I'm buying strategy. Yeah, buy Bitcoin. But you can buy Bitcoin. You can buy Bitcoin through IBIT or Bitto or any of the other ways you can do it. It doesn't make any sense. What the fuck is wrong with people? I don't know. My cussing thing really failed today. I endeavor, but this is the end of the second day of my fasting. I go into day 3 tomorrow. Tomorrow at 1 o'clock, I can start eating again. I had dreams of, this is how OCD I am, I guess. I don't know. I adhere to rules. So in my dream, there was a table full of seafood and lobster. You know those lobster rolls where it's like the delicious buttery bread with lobster in it? You know what those are, right? Well, I had one. I took a bite, and in my dream, I realized, wait, I'm fasting. And I spit it back out, the bite, and then I took the lobster sandwich, I put it in some kind of little container thing, and I was looking for a refrigerator to store it. This is what I was doing in my dream. I should have been eating everything. If I have a food dream tonight, I'm eating everything you put in my face. I think in the dream, maybe I knew I was still in the dream, but I thought, wait, if I eat in the dream, would that convince my body to leave autophagy and go back to that normal kind of calorie burning regime? Crap, I don't want that. Plus, I want all these stem cells that I'm going to get. See, day 3, from hours 48 to 72, that's when you get all of the stem cells. So you can either go spend $10,000 in Mexico and get stem cells from Dr. Juarez, who knows if you're getting anything but just water, aqueous solution. But you can force your body to start producing stem cells at a very high rate if you're willing to fast for 3 days. On the 3rd day is when it starts around, I think, hours 42 to 48 or whatever, and that's when your body starts pumping out stem cells. So starting here in about 3.5 hours, I'm going to be pumping out stem cells like crazy. So yes, the profanity muzzle did come off today, but it's not because of my fast. It's because of this douchebag, Michael Saylor. And it just creates this other weird narrative that people talk about. Oh, if the price goes down, they're going to have to sell. And so it can't go on forever. He can't, unless Bitcoin goes up forever. And the thing is, this company doesn't have enough money to buy Bitcoin forever. They just don't. So unless, and I do think Bitcoin will go up forever, but I also don't think it's going to be in a straight line, as the last 3 months have shown us. 126,000. Today we're at what, 80, 88, 89,000? Let's look at these markets. We're at 89,000, which is good. I'll take it. I'll take it. But come on, bro. Bro. Come on, bro. So that's where I'm at. So if this is short covering, which it may be short covering up to 90,000. We'll see. Okay. Quick note. Tomorrow is a half day for trading. Thursday, no trading. Friday, full day. Okay. All right. Oh God. This next part of this article is going to really make me angry. I don't even want to read it. I'm reading it to myself before I read it to you guys. To keep the story legible and believable for investors, Strategy leans on a set of Bitcoin native metrics that they've created. The key one is BTC yield. I want everybody in the chat that can hear my voice to write BTC yield is BS. BTC yield is BS. This is not a real thing. It is a made up dumpster fire term. BTC yield is BS. They say the key, their made up metric, completely made up, this does not exist. The BTC yield, which the company defines as the period to period change in Bitcoin per share of their company's equity. Its BPS ratio is also BS. It tracks whether each diluted share is backed by more Bitcoin over time. Well, how could it be, Michael? The only way the Bitcoin per share could go up over time as you perpetually dilute is if the price of Bitcoin goes down, so that the money they spend on Bitcoin by diluting you, by the way, gets more Bitcoin. That's the only way this works. So their BPS ratio, which is a BS ratio, can only go up if the price of Bitcoin goes down. So this is how they make you feel okay over your loss. They say, yes, listen, the shares are going down. But the good thing is, even though you're losing money on our shares, we own a bunch of Bitcoin. You don't. We do. Yeah. You paid for it. Yes. We diluted you. Absolutely. But because the price of Bitcoin's also down, good news, you get more Bitcoin per share. Woo woo. It's so stupid. It is so stupid. So the pitch becomes less about we bought more Bitcoin and more about we increased Bitcoin exposure per share because the price collapsed. God, dude, man. How strategy funds purchases when Bitcoin is falling? Well, Strategy's dip buying is financed through the capital markets, mainly by issuing securities and converting that demand into Bitcoin as you are diluted as a shareholder. The company is unusually explicit about this in its filings. In the same Form 8K that disclosed the latest 10,645 Bitcoin purchase, it also stated the Bitcoin was acquired using proceeds from sales under its at-the-money programs. Well, what does at-the-money mean? It means you're getting diluted, you dummies. It's called common stock sales, ATM. That's their ATM. They go to the ATM. Mike goes to the ATM. For him, he's pulling out cash. For you, you're getting your ass diluted. An ATM program is essentially a standing authorization to sell stock into a normal market trading over time rather than executing a single large capital raise, which they also do. These guys have their cake, eat it too, vomit it up, eat it again, vomit it up, and then you eat it as a shareholder. In the week tied to the latest Bitcoin purchases, December 8th through 14th, Strategy reported selling 4,789,664 shares of MicroStrategy for $882 million in net proceeds. Dude, God. Maybe it's the fast talking, but this really angers me. It really bugs the crap out of me. That setup explains how the company can keep purchasing even when the macro environment looks ugly, even when the price of Bitcoin goes down, and even when their share price goes down. Partially because of their behavior, the price of their shares go down. Why? Because they're diluting. Every day their ATM is diluting you guys. Not you guys. No one here is dumb enough to own this crap. It allows Strategy to convert equity demand into Bitcoin quickly without waiting for a perfect risk-on moment. Well, we know they don't care about the risk-on moment because they buy high and sell you shares low. Oh, what a dick baggery this is. Preferred stock as a second funding lane. Alongside common stock, Strategy has also been issuing multiple preferred series. The Form 8K lists STRF, STRK, STRD. They should just take the S off that and just be turd, among others. During the same week, the company reported selling preferred shares as well, including STRD and smaller amounts of other series as part of their funding mix. The trade-off is the preferred shares typically carry ongoing dividend obligations, which matter more when prices fall and sentiment turns. They also give Strategy another avenue to raise capital when common stock conditions are less favorable. This is a dude who used all his margin, who then went to his parents, borrowed their ATM card, used all their money up, then went to his grandparents, used all their money up, went to his kids, used all their money up, except that he doesn't have kids because he's a fucking creep. Debt and convertibles, leveraged with a long fuse. So even when the near-term purchases are funded through at-the-money flows, meaning steal from everyone you know, Strategy's broader approach has included debt and convertible style financing to scale Bitcoin exposure. If the company believes long-term Bitcoin appreciation outpaces, does any of this sound any different than just a junkie degen gambler at a casino just going and hitting up mobsters for extra money? Just like, give me some more cash. Did anybody see Black Rabbit recently? Was it? I think it was either HBO or Netflix. Black Rabbit. It's awesome with Justin Bateman and Jude Law. Let me see it. It's dope. It's about some degens. Anyway, this is that. So. Even when these near-term purchases are funded through at-the-money flows, Strategy's broader approach has long included debt and convertible style financing. So we get this. So if the company believes that long-term Bitcoin appreciation outpaces its cost of capital, meaning if they think they can get away with this Ponzi scheme, this is what this is. If they think they can get away with a Ponzi scheme and that the price of Bitcoin will continue to outpace it, which you could say they're going to get away with it because Bitcoin has outpaced every other indicator. It's outpaced, over time. It's outpaced every market inflation, even the fake and real inflation. It's outpaced everything. It's still the most appreciating asset in human history. So, although we don't have a lot of data, 15, 16 years is not a sufficient data set. I see what he's doing. He's just saying, yes, it's a Ponzi scheme, but this is a Ponzi scheme that will work because historically, because TA, Bitcoin should outpace everything, right? So that's his argument. And then he just gets out there and yells at people, but Bitcoin, sell everything, Bitcoin. It's like, my God, man. My God. So if the company believes that Bitcoin can outpace its appreciation will outpace its long-term cost of capital, it can keep stacking as long as markets are willing to fund it on tolerable terms. This is the problem. I don't know why any of this is tolerable at this point by any sane human. Anybody that looks at this, any sane human. I mean, analysts who track the structure often describe its premium as a leverage machine when the stock trades at a rich valuation relative to the value of its Bitcoin holdings. So you're paying extra money for Bitcoin that you could pay. Well, you could get paid, couldn't you? You could buy IBIT. You could sell puts against IBIT. You could buy IBIT and sell calls against IBIT if you want to get paid. Or you can give this guy $2 for $1 worth of Bitcoin or less. When the premium compresses, the machine starts to slow down and collapse. Put together, it's a repeatable loop. If and only if Bitcoin continues to perpetually go up. But the idea is issue common stock, preferred shares or debt, raise cash. All of these things are either dilution or creating higher cash obligations in the future. You owe these things back, okay? Then you buy Bitcoin. Then you publish Bitcoin per share progress and try to sustain investor demand long enough to get to the next round before people go, wait. Did he just dilute the shit out of us to buy Bitcoin? So what? Because of this, the durability of strategy. It is a tragedy. Strategy. If you just move the G, strategy. That's the new name. Holy shit. Don't let me forget this. I don't know where my mind is going to be when I eat food again. This is a strategy. Get it? Tragedy. It's the same letters in the name. I should have seen this a long time ago. The durability of tragedy, dip buying, especially during drawdowns, depends less on conviction and more on whether the loop stays cooperative. That's cute. Why downturns can function as accumulation periods for this model? Well, because that's when they can give you their little Bitcoin per share song and dance. And you're like, oh, okay, cool. So I'm losing money, but I'm getting diluted and losing money on the shares, but you're getting more Bitcoins. This is good. This is a good thing. No, they're not related. They make no difference because you can't trade your shares for Bitcoin. They're not fungible assets. You can't go trade. You have to sell them, but you can't go trade your shares for more Bitcoin. All you can do is go sell your shares and go buy Bitcoin like a jackass. So Bitcoin per share is a fucking garbage term too. I bet it turns out that when you go through this guy's his 8K filings, you go through their whole quarterly, it's all bullshit like this. I bet you there's 13 different bullshit words that mean nothing. Made up fucking metrics. On paper, a market downturn is the worst time to be a serial buyer. Prices are falling, headlines turn negative, lenders become more selective. That's what we're seeing right now in private credit, right? For tragedy, though, the downturn itself is part of the pitch. The company's less focused on timing the bottom and more on proving that it can keep accumulating through volatility. See, guys, we're fine. I know the price is down, but I'm gonna dilute you more. I'm gonna make what you have more worthless, and we're gonna buy more Bitcoin. We're fine. Everything's fine, guys. You got more Bitcoin now. Well, not really. You got diluted. We diluted you. You don't really have more of anything. We have it. You don't own shit. Equity holders don't own shit. The only people that might have a claim on the Bitcoin are senior note holders, maybe preferred stock. Doubtful, though. That's doubtful. Doubtful. It's going to be preferred. It's going to be the highest corporate paper holders. That's it. Everyone else is getting fucked. So the catch here to all this crap is they're buying the dip. This idea that it only works if strategies' cost of capital remains manageable. If their cost of capital skyrockets up, then servicing the debt they use to get the money to buy the dip won't be enough. They won't be able to cover it. They won't be able to do debt service. And they're like, okay, we'll go hit the ATM. We'll go hit the at the money private the public markets. You think they're going to keep buying your bullshit? Like, how is this company still a thing? I mean, I will be honest. This is one moment, just one moment in time where I don't mind Gary Gensler. I guarantee you Gensler looked at this and went, this looks shady as shit. I'm not saying we need Gensler, but I'm saying someone really ought to look at this bullshit. This is a fucking clown show. So when stock trades tragedy, when tragedy trades at a meaningful premium relative to the value of Bitcoin, it already holds. Issuing equity can appear accretive to the company's Bitcoin per share narrative. When the premium narrows, something that often happens when Bitcoin and other risk assets slide backwards, like from October until now, issuance becomes more expensive. Dilution hurts more. The cost of servicing debt hurts more. Investor sentiment is lower, and each incremental purchase is harder to justify. I think they're all hard to justify. Anyway, this is where tragedy becomes reflexive. Strong equity demand makes funding easier, which supports more Bitcoin buying and can reinforce demand from less educated or less sophisticated investors. Meaning, guys, this is a dummy trade. This is the dumbest of the dummy trades. What network is it on? What network is tragedy on? So if in a sustained downturn, okay, the loop can run in reverse. Weaker sentiment compresses the premium, tightens funding, slows accumulation, hurts investor sentiment. Strategy can still buy in that environment, but the pace is dictated by the market appetite for its garbage paper, not by how cheap Bitcoin looks on a chart. So why do I spend so much time talking about it? Because there's still people out there buying it. There's still people out there buying it, buddy. And also, it's important that you work through the nuances of this Ponzi, because, Ryan, I'm betting if I ask you some questions over the material we just covered, you might not get it right. And why it's important is because there's a lot of similar kind of Ponzi-esque schemes running right now, especially in private credit and in some of these tech companies and even in some of these AI companies. So if you start to understand the mind of if you start to understand the game theory behind Ponzi-nomics, then you won't be led into these kind of situations, or you'll be able to identify it soon enough to get the fuck out of there. So that is why. And that's why we will continue talking about it. Because I'm not trying to tell you what to buy. I'm trying to tell you how to think for yourself and make really good choices. And that's based on a fundamental game theory playground. That's why. So we shall continue, sir. Again, in a sustained down loop, when the price of Bitcoin drops, the loop runs in reverse. So weaker sentiment compresses premiums, right? It tightens funding, means it's not as easy to go get funding. Not enough people saying yes. It slows down accumulation. It doesn't let you tap your bullshit at the money markets because investors are like, I'm not giving you money. Price going down. Strategy can still buy in that environment, but the pace is dictated by market appetite for its paper. Okay, this is the part that gets tricky, not by how cheap Bitcoin is. It's paper. It's usually, I mean, I'm sure they have 7 different versions of corporate paper. But the only people that get taken care of in an unwind, if there's a catastrophic unwind of this company, it's going to be senior note holders. Okay, senior debt. Then it would step down to the different levels of corporate paper holders. There's probably many levels in this pie, or in this stack of pancakes. Equity owners get nothing. You guys all, a quick show of hands, yes or no. You guys understand that in any kind of unwind of a company, bankruptcy otherwise, equity holders get nothing, right? First in line for dividends, last in line at liquidation. Okay, this is like the first thing they teach you when you're going to get your series, either series 7 or your, what's the new one everybody's doing? Anyway, whatever. 6, there's a 6 series something. Anyway, equity, you own nothing. Like if you own shares of Apple, you don't own bricks in Cupertino, right? You can't go set up shop at an office. You don't own anything. You gave them your money. You understand the liquidation and bankruptcy risks. That's it. Equity is the lowest form of cap. But the only thing you do is you get dividends. And you can, a lot of people live off dividends. So I'm not saying that's a bad strategy. I'm just saying just know what you own because you don't own much. So their $1.44 billion USD reserve, this is mostly a smoke and mirrors bullshit thing. So the most direct answer strategy has offered to the what if this drawdown lasts question, like what if we're in a sustained lower market, which I don't think that we are. Because I think if we were, Bitcoin would have dropped below 80 and kept going. So I think all of these guys, because the market's been bad for 3 months, call a bear market. Like, where were you 3 months ago, motherfuckers? Where was Benjamin Cohen 3 months ago? I guarantee you he wasn't calling a Bitcoin bear market when it was 126,000. Fucking douchebag. He was calling for 170 like everyone else. But now, wow, what a courageous, wait 90 days. What a courageous proclamation. Anyway, so Strategy has their $1.44 billion reserve, which is a cash buffer set up to pay preferred stock dividends and interest on outstanding debt in the event that they can't tap the capital markets, the idiot investors. But how they raised it, well, they sold common stock. So the very way they would raise money to buy more Bitcoin is the way they raised money to buy their $1.44 billion reserve to reassure you that you're not going to get diluted too much and that they'll be able to pay a dividend. So they sold, this is the beautiful part. You guys see what they just did, right? They diluted stockholders to protect, like we just talked about, note holders, corporate paper holders. They diluted the fuck out of the equity holders to pay immediately to put a cash reserve to reassure the senior debt holders in the liquidation event. Who gets paid from Bitcoin? Senior debt holders. Who gets paid from you see where this is going, right? What a scam. And people are okay with this. This thing should be 3 cents, man. It's like, hey, buddy, you got the money to pay me back? I sure do. Hold on a second. He takes your wallet out, takes his money and says, I got it right here. And then you're like, well, can I have it? No. This is in case I need to pay you. I'm just going to put it in my back pocket. Like, wait, shit, it was in my pocket. Yeah, no, I know it was. It's not now. So anyway, the reserve, the cash buffer, they got diluted in making it, and it doesn't even help. It's not even used for the shareholders. It does nothing for them. The company says the reserve was funded using proceeds from their Class A common stock through its at-the-money program. Yeah, no shit. This matters because Strategy's capital stack is now part of the story. Preferred dividends and debt interest do not wait politely for Bitcoin to recover. They get paid no matter what. If the markets freeze and the company cannot issue comfortably, those payments become the point where critics start asking whether Bitcoin holdings might ever be used to plug the gap. So you see how this works? The minute they have to even talk about selling one Bitcoin, you would think this thing should have already collapsed. It should have already collapsed. Dilution, higher carrying costs, index rule pressure. So the first constraint here is dilution, right? So Strategy, their accumulation loop works because it can continually sell new securities, meaning diluting current shareholders through common stock, through its at-the-money program, and convert that into Bitcoin, or in this case, Bitcoin and some cash, so that the senior note holders can sleep at night. The flip side is that the share count continues to rise over time. Dilution continues to dilute over time. The stock price would, in that scenario, go down over time, which is why the company encourages investors to judge performance through Bitcoin per share metrics rather than BTC total. See, this is the newer. Bitcoin yield was the term for last year. That was so 2025. 2026 is going to be about Bitcoin per share. BPS. Woo woo. In a downturn, the dilution becomes louder, right? Because the stock price is usually weaker as the price of Bitcoin goes down, and they continue to dilute you even more to buy more Bitcoin as it's going down because the company keeps issuing shares against it. So then they have carrying costs. So we're not done. Preferred dividends, right? Senior debt interests are fixed obligations. Fixed. There's no way out of it. So when capital becomes more expensive, those obligations are the same. They don't shrink. The company then needs fresh issuance, sufficient cash on hand, hence their bullshit USD reserve, the dilution reserve, or another liquidity source to keep payments coming in, right? They already have like 6 of these funds. Don't you think it's suspicious that they keep creating new funds? Why? To steal more money from fucking idiots. So the longer the drawdown might last, the more investors focus on whether financing remains feasible or reasonable. Then there's index and rule sensitivity. It's going to be almost impossible for them to be included in indexes, in any real indexes. Inclusion in major indexes can support marginal demand for the stock, but classification framework and rules about running a fucking Ponzi scheme are still evolving for firms whose case story is digital asset treasury management rather than their original business construction. MSCI Micro Tragedy consultation on how to treat companies with significant Bitcoin treasuries is one of the clearest watch items because an unfavorable outcome could change how some funds are allowed to hold or size their exposure. Meaning that MicroStrategy and many of these other digital asset treasuries would not be able to be purchased into index funds unless you created a specific index fund that was just these trash companies. And now you can have earnings swinging very wildly back and forth because on paper, it feels operationally like like this is a bad company. Well, yeah, it's a failed company that buys Bitcoin. So new U.S. guidance for crypto held companies. If your company holds crypto, the guidance is ASU 2023-8. It moves qualifying crypto assets onto a fair value basis with unrealized gains and losses flowing through net income each reporting period. So if the asset on your balance sheet gets its ass kicked, you have unrealized gains or losses, unrealized losses in this case, which flow through the net income reporting period, right? This means that a sharp Bitcoin move late in a quarter can materially swing headline earnings, even if the company did not sell a single coin. Why? Because they have to report at the time. It's fair value basis. Unrealized losses, unrealized gains. It's kind of like a big mark to market. That's the way you could think about it. Yeah. And Kurt, that's a good question, but that's kind of a Brandon question. We will chat about that tomorrow. Let's see. So for investors, a reported profit can now resemble a proxy for Bitcoin's chart. So in a downturn, that can amplify negative optics, even when strategy is still funding buys through diluting a bunch of asshole idiots. So kind of put a button on this. What keeps them running? Why would sane individuals, I know that's a leap. Why would educated, well, that's also a leap. Why would anyone that has enough intellect to breathe during their sleep, okay, they don't need to think about breathing in and breathing out. If you have that much IQ, what keeps you believing in this company? So strategy's downturn buying looks relentless because the company has built a repeatable mechanism. Dilute, sell paper, raise cash, buy Bitcoin, then measure the success and trumpet Bitcoin per share terms to make everyone think they're okay. The question going forward is whether that mechanism stays cheap and open when markets remain stressed, and how long people are going to not see this for what it is. How long before someone with a fourth grade education goes, wait, this is a Ponzi scheme? Yeah, yes. So I guess we have to see how much room strategy still has in its at the money programs. What's the point where people just say, no, I'm not buying your crap. No more shares of micro crap, of micro tragedy. Whether it continues converting issuance into purchases at anything close to the current price. We have to watch whether their $1.44 billion USD dilution reserve remains a growing cushion or becomes a reminder that dividends and interest are real bills that you must pay every quarter, regardless of Bitcoin's mood that day. Strategy. It's a strategy. And we have to keep an eye on how index providers, how they classify these kinds of assets and how they treat digital asset treasury companies in general, because shifts can subtly change the pool of buyers that might support this entire loop. And I mean, without index fund exposure, I don't think strategy can survive among reasonable investors. It can survive among idiots forever because idiots are stupid, and that's why they don't know. But I don't know that technically idiots aren't stupid. Idiots just lack information. But this is that they lack information. I think if anybody, any reasonable person understood what strategy was, they would fucking run away from it. So that's my 2 cents on that, Governor. So yeah, this just brought me so much ire earlier. I figured I had to. This is a peaceful kind of vent. So yeah, all right, not too peaceful. I dropped some F-bombs, but I didn't drop any the other day, so I'm doing good. I'll try to keep the profanity at a minimum tomorrow, but I can't promise anything. All right. Stay in school. Don't do drugs. Don't do anything about pouring solve a drunk, strung on a meth grandmother, or Brandon wouldn't do. I don't know what the weather is down there, or I think he's in Phoenix. I know the weather is here. It's going to be 70. Whoop, whoop. That's not bad, man. That's not bad weather. I might even heat up this. I might even jump in this pool. All right. See you guys. Where will Michael hide? He doesn't care. Michael's a douchebag. He's rich. You idiots made him rich. He doesn't give a crap. None of these guys, once these guys get to be billionaires, it's just keeping track. None of it makes any difference to any of them. I hope I get that cynical, and there's a better word for it, nonplussed, non bought in, disattached, disaffected, disillusioned, whatever that litany. I hope I get there. I need $1 billion to do that, though. All right. See you guys tomorrow.